All right, so just finishing that question off with the budgeted trading profit and loss account for the 4 months ended the 31st of October 16. So sales, so remember in the trading profit and loss account, it's sales revenue that goes in. So it's 4 months ended October. So it's these 4 added together that are going to go in as sales revenue. So if you add the 4 of those together, it's 1,252 500 less cost of sales. So that's going to be opening stock. Just putting it in. It's a startup and there's none, so we don't actually have any opening stocks. That'll be 0. Plus purchases. So that's 621,432. So again, that's not when they're paid for. All right. So it's these 4 added together. Okay. So from the raw material purchase budget. So in the actual cash budget, October's wasn't paid for till November, so it didn't go in. But in the profit and loss account, it needs to go in. So it's these 4 months we're doing a profit and loss for. So if you add the 4 of those together, it's 621,432. So then we're going to have less closing stock. And just be careful here because we have 2 types of closing stock. So we've got stock of finished goods. So in October, that's 7,500. And we've also got closing stock of raw materials. And in October, that's 7,608. All right, so 2 types of closing stock. So raw materials and finished goods. So the raw materials in October, 7,608, and they cost €4 per kilogram. And that is 30,432. The finished goods then, so that's from the production budget, and just be careful here, it's the October closing stock we want, not November. So October closing stock is 7,500. And we're told that budgeted cost of a unit of finished goods is €20, so that's where this comes in. So multiplying that by 20, so they are 150 grand. Add the 2 of those together and it gives you a closing stock of 184,432. So purchases, so no opening stock, put 0 if you want. So purchases, take away that closing stock is going to be 441. And then sales less that, your gross profit is 811,500. Let's just going to take away expenses then. These you generally take from the cash budget. So purchases have already done. So wages, variable overheads, fixed overheads. Variable overheads, fixed overheads. Equipment doesn't go in the profit and loss. Capital loan repayments don't go in the profit and loss. Interest we'll do that at the bottom just before net profit. Don't forget though that when we were doing fixed overheads, we stripped out depreciation, but depreciation does go in the profit and loss. Okay, these were all payable as incurred, so if I had a total column down here, I'd just be taking the numbers from there. I didn't do one, so add the 4 wages figures together and you get 102,625. four variable overhead numbers together and you get 197,000. The four fixed overheads then are 108,000. For depreciation, remember, it was 1,000 per month. This is for 4 months, so that's €4,000 depreciation. That's all the expenses. As I said, the interest we're going to do further down. So if you add the four of those together, they're 411,625. Subtract those from each other and you get 399,875. We call it operating profit. And then subtract your interest. The interest is €400 per month, only starting in August, so 3 400s are €1,200. And if you subtract those from each other, you get 398,675. That's your net profit. Okay, so don't have to worry about discount received and discount allowed like we do for a lot of the cash budget questions, because they make it so some things a little bit easier because you need to do those extra couple of bits at the start. Okay, so that's the 2016 higher level question 9 done in full.